What's up, everybody? Jaspreet Singh here. And when Bitcoin hit almost $70,000 a coin, everybody said that cryptocurrency is going to take over the world. Then, not too long ago, when cryptocurrency and Bitcoin fell to around $20,000 or below $20,000, everyone said that this is the end for cryptocurrency. Bitcoin's going down to zero. Now that we're seeing Bitcoin and crypto start to rally a little bit, people are confused. What is happening to crypto? Is it the end? Is it going to go up? What's going to happen with crypto? Now, what I want to say is if you want to be an investor in any asset class, whether it's crypto, real estate, stocks, what you have to remember is that investors are investing for the long term, and you have to understand that as an investor, you're investing for fundamentals, not on technicals. What I mean by that is you're investing for the long term based off of the real value that the asset provides, not just short-term swings up or down. And so now when we talk about investing in things like Bitcoin or cryptocurrency, you're looking at the long-term value of cryptocurrency, particularly Bitcoin in this case. And so if you talk about why were people buying crypto or Bitcoin to begin with, what was that reason? Well, the original reason why people were buying Bitcoin was because they wanted to get away from the fiat currency, the dollar, because we have the Federal Reserve Bank printing money like crazy and the government spending money like crazy. Our dollars are not backed by physical gold. It's not backed by anything tangible. It is just money, and the government spends more money than they bring in. We are the biggest debtor nation. We are spending more money than anywhere else in the world. And how are we paying these obligations? Because our national debt is ballooning. Well, we're just printing even more money to keep stimulating, and people get worried of what's going to happen. I mean, eventually the dollar is going to lose a lot of value because no empire can sustainably print their way out of an economic slowdown or print their way out of a currency slowdown, which is one of the reasons why people have been moving to something like Bitcoin or some of those cryptocurrencies. Gold has been the traditional inflationary hedge. But now you have a lot of people, especially the younger demographic, who are saying we want something more digital, something that aligns with our interests more, and that's where Bitcoin was created, where now it is a limited supply, kind of like gold, and it allows you to do things that gold doesn't. Like you can transact with Bitcoin much easier than you can with gold. You can transfer Bitcoin much easier than you can with gold. Now, it doesn't have all the same benefits that maybe gold has because gold is tangible. You can see, feel, and touch it. Bitcoin, you can't. And so this is where, Bitcoin and crypto has that more speculative edge versus gold has been around for centuries. It's been money forever. So now the question is, what's going to happen 10, 20, 30 years down the line? Is cryptocurrency going to be more adopted? Is Bitcoin going to be more well adopted? And this is where you have to make the decision. Either you're going to say, yes, I believe in the future of Bitcoin, or you're going to say, no, I don't believe in the future of Bitcoin. If you say yes, then this can create an opportunity for you to buy if you find a good price. If you say no, then don't buy Bitcoin. If you're somewhere in the middle, well, then you got to make a decision because you don't want to just buy things for the sake of buying it unless you understand that it's risky and speculative. Like for me, I believe in Bitcoin. I invest in Bitcoin. But I also understand that it's risky and speculative, so it's a small piece of my portfolio. I also invest in physical gold. And so you have to understand how cryptocurrency plays a part, because now we are seeing more and more changes with cryptocurrency. For example, just recently, Coinbase partnered with BlackRock to allow institutional clients, wealthy people, wealthy institutions, to be able to get access to cryptocurrency. Let me actually read you the quote from BlackRock. It said that, quote, "Our institutional clients are increasingly interested in gaining exposure to digital asset markets and are focused on how to efficiently manage the operational life cycle of these assets." So that creates opportunities for cryptocurrency, but that doesn't mean that we're going to go without regulation. Now, I do want to let you know that if you are interested in purchasing crypto, you don't want to keep any cryptocurrency on an exchange, especially in this type of market cycle where we're seeing all these speculative movements. Use an exchange to buy cryptocurrency and take your cryptocurrency out, put it on a wallet. Ideally a cold wallet. I use a Nano Ledger. I'm not sponsored by them. It's just who I use. But at the very least, use a hot wallet, something on the cloud, so your cryptocurrency is not stuck on an exchange. Now, if you're looking for a good exchange to use, you can check out our sponsor, FTX US. I like FTX US because, for one, their fees are so much lower than pretty much every other major brokerage out there. So more of your cryptocurrency or more of your money is going to actually buy you the crypto that you want instead of just making your brokerage richer. And over the last number of months, FTX US has been bailing out, or FTX has been bailing out a lot of struggling crypto firms, and they've been able to help out a lot of firms. And on top of that, now they've also launched a new feature which also lets you buy and sell stocks right off of their platform. So you can trade cryptos, NFTs, and stocks right off of FTX US. It's super easy to use. You can dollar cost average your crypto very easily. Like I buy crypto, Bitcoin and Ethereum and a couple other coins every single day. Super easy to use, and the fees are so low. So if you want to sign up with FTX US, they are giving you Minority Mindset fans some free crypto if you use my referral link after you trade $100 worth of cryptocurrency. So if you want to get some free crypto, all you got to do is use my link down in the description below and then enter in the referral code minority. That way you can win some free crypto. Now, let's talk about some of the changes that are happening with cryptocurrency right now, because we are seeing a number of changes. One of them, which is an interesting one, is now lobbying by cryptocurrency. Now, this one is kind of interesting because there's this kind of, I don't want to say this in a very negative way, but there's this whole idea of some politicians being bought. And when you can buy a politician, it helps certain things go in certain people's favors. Okay, I think this is like one of those things where nobody likes it, but it happens. Well, what we've been seeing happen is the Washington Post recently put out an article talking about now how crypto executives or crypto firms are now doing a lot of spending and lobbying for politicians. And this is kind of interesting just because, you know, it kind of puts in perspective of what could potentially be happening, because now we're seeing some firms spend tens of millions of dollars on lobbying politicians to get them now to approve cryptocurrency regulations that can help make crypto more favorable for use. So just something interesting that you want to pay attention to, because we've been talking about on this channel how there's been a lot of talk of different crypto regulations happening that could hurt certain types of cryptocurrency trading. It could hurt DeFi. It could hurt a lot of different things, but now we're starting to see a lot of spending by crypto firms in the tune of tens of millions of dollars to get politicians now to approve more favorable cryptocurrency regulations. But if you look even a little bit further now, if you look at what's going on in the economy, because the whole issue right now is we have all this inflation that doesn't look like it's going to go away anytime in the near future. This is one of the reasons why people have been moving away from the dollar, is because they want a way for them to protect their money and to own an asset that is more scarce. Now, traditionally, this has been gold, and gold has proven itself through the test of time, but Bitcoin is now going to be shown whether it is or it is not going to serve as a real currency. Now, again, this isn't something that's going to happen overnight. This is something that takes time, years, if not a decade or two, to really show its value over time, because the reality is young people especially do everything online. And when you transact on the internet, you spend money on the internet, you live in the internet. I mean, with the new VR and ability to literally live in the internet, everyone is doing everything on the internet, which is now a big case for people to want to have their assets stored online. Now remember, Bitcoin started off as this digital currency, but now more and more it's being used not just as a currency, but more as a property, meaning it's a way for you to store money. Now, of course, this hasn't been the best store of money because it's so volatile. But this is where, you know, again, it's one of those things where you're seeing people in other parts of the world, not just the United States, but other smaller countries, where they're facing significantly higher inflation, not 9% inflation, but significantly 30, 40, 50, even 100% inflation, where now they want to use something like cryptocurrency, something like Bitcoin, because now it's something where you can protect your money, because they don't want to hold their currency. They want to hold something more stable, and they can't get access to dollars. So for those people, you can see the real value of cryptocurrency there, because now it gives you another way for you to store your money that could provide you with more protection. And it gives you more access to technology that you wouldn't normally have, because the banking system in some of these less developed countries are not advanced. And so now if you want to transact, you want to access your cash, you want to be able to move your cash, it's extremely difficult to do that, versus with now some of the cryptocurrency exchanges, you have the ability to access way more technology than you normally would have. This is where, when people talk about cryptocurrency and the value of it, they talk about it in just their own neighborhood, in the own bubble that you see. But if you look at it from a much bigger picture, that's when you can start to really see the value of cryptocurrency on a much broader basis, because there are so many people that lack access to basic banking that is so normal and so easily accessible to developed countries. Well, not everywhere in the world has access to that. This is where cryptocurrency can provide value. Then if you go a little bit deeper, it's also the technology that the blockchain can provide. Things like smart contracts, things like building communities online that give you access to exclusive things, where now if you use something like, for example, Ethereum, it has a blockchain which now allows you to do much more than just transact. I mean, you can build actual contracts to do real business on top of the blockchain, because it's not just a currency now, it's a technology. It's like a software that companies and people can use to do business. And this is where now the value becomes much more valuable. But you have to also understand that anytime you start to see the growth of something new like this, you also see the growth of scams and crap coins, where you have a whole bunch of scams, you have a whole bunch of crap coins. Many of them will fail, especially as we raise interest rates. As we raise interest rates, speculative assets get hurt. And cryptocurrency 100% is a speculative asset. It can go to zero. It can definitely go to zero. But this is where, again, you got to understand why you're investing and where you're investing, because some of the cryptocurrency coins will go to zero. And this is where you want to make smarter decisions and not just invest your money in places where you're hoping that you're going to double your money in 60 days. Those investments can make you very rich, but they can also make you very poor very fast. It's gambling. That's not the game that you want to be playing if you are an investor. And this is where also cryptocurrency exchanges are going to get hurt, because many cryptocurrency exchanges are tech companies that were a byproduct of the bubble that we saw over the last couple of years. That's why we saw Celsius declare bankruptcy. That's why we've seen a number of other of these exchanges declare bankruptcy, because they were relying on the cheap and free dollars. They were relying on the low interest rates. And now as interest rates go up, it becomes more expensive to do business, especially if you are a tech startup company that doesn't have any real profits. And so this is where now you as an investor need to be able to decipher through the noise, understand where the good investments are, because I don't think that the volatility of crypto is anywhere near done. I think that things are going to get hit harder as interest rates continue to go up, as we continue to see that the economy is slowing. That's going to hurt cryptocurrency, especially as a speculative investment. But this is where now you got to understand the fundamentals, know why it is that you're looking to invest in it, and then look for a good buying price, and then be willing to hold on for the long term. So the Federal Reserve Bank can then kind of manipulate this, because then they can pump money into or out of the economy and the markets. Now, as of today, the time when we're recording this video, the Federal Reserve Bank is saying that they want to get inflation down to 2%. And until it's down to around 2%, they're not going to start stimulating.